now the weekend edition. I'm Mubina Kapasi, and of course this is a show where we answer your viewer queries, get your portfolio addressed, as well as give you top technical as well as fundamental recommendations. It's a jam-packed show, so let's get straight to it. First up, today we'll be discussing Ajit Pawar as well as Nilufar Naz, who have sent in their viewer queries on RBL Bank, HUDCO as well as M&M Financial. Later on our portfolio segment today, we'll be discussing Mr. K. Sanjay's portfolio. So let's introduce our guest then. We have Avinash Gorakshekar with us to talk about the fundamentals of the markets as well as address us with and help us with his fundamental options. And on the technicals, we have Sarvendra Srivastav. Welcome to the show, both of you. Thank you so much for joining in, gentlemen. And let's go across first to our viewer query from Ajit Pawar, Mumbai. He says he has bought 100 shares of RBL Bank, which he's purchased at 580 rupees per share. And he wants to know what are the prospects of the stock touching 650 rupees. Well, at this point of time, it's a far cry from 650 rupees. But Avinash, let's get in your fundamental advice first. RBL Bank is a stock that has seen a lot of investor interest. A lot of people say that this is going to be the next big bank in the next coming years. What do you make of the fundamental prospects?
Yeah, I think, I think RBL Bank has done reasonably well in the fourth quarter, and I think has given a very strong growth commentary for FY18 also. Our sense is that, RBL Bank is a bank which is going to do exceedingly well over the next 12 to 18 months. I think the kind of price he has entered into, I would suggest that if he can probably wait for the next, 1.5 years, he could expect a decent risk reward ratio. I would say that, in terms of asset quality, in terms of the geographical reach, and in terms of the business model, RBL looks well positioned. I think he could look at a target price of 650, but I think he needs to wait and keep a time horizon of at least next 1.5 to 2 years. So I think he's well invested, but I think he needs to give it some time. So I think hold on, and definitely long-term prospects are good.
Okay, so be patient with this investment. Avinash is saying that it could perhaps touch 650, the target that you're watching out for in the next year and a half. Sarvendra, come in then on the technicals, on the charts of RBL. What do they suggest?
Yeah, I think I would like to concur with what Avinash is saying. I think clearly the data is very limited here, so it will not be suited to do a slightly longish kind of analysis. But yes, we can look at it medium term because we have around 12-13 months of data here. So now the problem here is that I think again my sense also is that he's kind of in this move which is slightly stretched. He's kind of bought the short-term top. So now I think there's no point now booking a loss and getting out of the stock. But I think if he has some fresh capital, I think at lower levels, at around say around 500 odd levels, I think he can probably look to average. Good supports for the stock are in the region of around 480. So even though the stop loss would look longish because, as I said, the data is less and the indicators are still not that smooth, so you'll have to take a wider stop loss. But my sense is that the overall structure is good. 480 is a good support, so around 500 try and average a little bit. Hold on, and again you'll have to increase your time horizon and not look at a 3-6 month kind of perspective. For me, I think for a 15-month horizon, I think this stock can easily do 700, 750 levels. So I think why only 650? Even 750 is within reach, but you need to have patience.
All right, patience is the key word. Hold on to your investment, money to be made in RBL Bank. But Ajit also has one more question, and he wants to know the prospects for HUDCO, Dr. Lal Patlap as well as Suzlon. Well, HUDCO certainly has had a tremendous listing on Friday. Avinash, but come in on these three stocks. What is your advice?
No, I think as regards all these three stocks, I think the longer term prospects are definitely good enough. In fact, HUDCO has got a very strong listing. It has got a listing with almost 28% gains from its IPO price. I would suggest that here also, I think if the investor is a slightly longer term kind of investor, he should hold on. He could possibly look at a price of around 90 to 100 over the next 12 to 18 months because prospects for the overall housing finance market are definitely good enough. As far as Dr. Path Labs is concerned, I would believe that it operates in the pathological space. It's a very dominant player. I think reported a little weaker set of numbers for Q4, but management commentary going forward for FY18 has been good. So here also he can hold on. And Suzlon, I would believe that things have started looking up at least on the working capital front, on the order book front. So I would believe that here he needs to give it at least another 18 to 24 months if he expects a decent upside. So I think in all these three stocks, I think he should hold on, but I think keep the time horizon slightly longer.
Okay, so all the three stocks, the fundamentals do look okay according to Avinash. Keep your time horizon, of course, longer. Sarvendra, of course, HUDCO is just a recent listing. There's not much chart history, but what's your opinion on Dr. Lal Path Labs as well as Suzlon?
See, I think for Dr. Lal Path Labs, I think clearly the stock has corrected from the time it listed. And again, data in this case is also limited, but slightly more. My sense is that a long drawn sideways kind of a consolidation is getting over. The stock has good supports at around 870, 880 odd levels. So my sense is that we are almost at the lower end of a good risk reward. So I would also say that with whatever limited data and limited view that I can take here, I can say that yes, with a 3-6 month kind of horizon, I think the stock can pull back towards 980,000. So that would be a best case in that time frame. And my sense is that the call will be a bullish call, and the stop loss would be below 880 on a closing basis. And if anybody wants to trade on this, I think the trade should be on the long side. On Suzlon, I think again this is a legacy stock I would like to avoid. I have not been giving many calls on Suzlon, but for the viewers, I would say that this is a legacy stock. At every level, I think there will be supply. There are people holding it from every price now. I think 200, 300, 100, 50, 60. At every price point, I think there would be supply coming in. People wanting to get out of the things that they've been holding for long. So I think this is a legacy stock. It will take a lot of time to recover. Even though it might have bottomed out, I'm not taking a call on that. But I think if someone has to make 20-30% a year, I think there are far quality stocks in the mid-cap space. So why go to Suzlon? Try and buy something else.
All right, a bit circumspect on Suzlon, but Dr. Lal Path does get a thumbs up from Sarvendra. Next up, we have Nilufar Naz, who has sent in her query from Hyderabad. She says she's bought M&M Financial, about 100 shares of that stock, purchased at 381.2 rupees per share. Should she hold or sell is a question, and she has a time horizon which is a bit short term. Well, she's losing some money in this stock, so her query is actually quite warranted. Avinash, what are the fundamentals for M&M Financial? Do you think she should extend her time horizon?
Yeah, I think clearly, I think this is a stock which is largely related to the Indian agri sector, and I think monsoons in particular. Our sense is that if the investor can hold on for a longer period, because the kind of results Mahindra and Mahindra Finance reported, I think asset quality has got deteriorated. Obviously recoveries are slow, and obviously the balance sheet is now little more stressed. So if the horizon is at least 12 to 18 months, definitely longer term prospects look good. But in the short term, at least for the next couple of quarters, you could see margins coming under pressure, and the stock definitely remaining range bound. So I would believe that keep the time horizon longer, and then only one could get a decent risk reward. In the short term, you could see a lot of volatility.
Okay, that's a fundamental call on M&M Financial. Sarvendra, meantime, how do the charts look for this stock?
Not good news, I think, is what I would say. This is a stock that has been in a sell list, a sell side repo list, and I've kind of couple of times I've initiated sells here as well on our channel. Now my sense is that she's already losing a lot of money now. The only silver lining here for her is that now that the stock has fallen all the way back towards its long-term averages, long-term support. So I think those are all somewhere around 300 odd levels. So I think quite a few support levels in that area. So my sense is that since she has held it for so long and she's got a trading bias, she should hold on with the stop loss below 300 on a closing basis. Look to exit on a bounce at 330, 340, because I think the longer term setups here are really on shaky wicket. Any break and close and sustained trade below 300, 295, I think this stock has all the potential to test the lows that it printed last year. That's around 250 odd levels. So my sense is that if this starts trading decisively below 300, 295, I think it's good point to exit once and then try and buy back lower at around 250, 260. So my sense is that not a good stock to hold for the next 3-6 months at least.
All right, that's Sarvendra's view on M&M Financial, a short-term view that would be a bit more pertinent to Nilufar, considering the fact that she has a short-term time horizon. We'll slip into a short break. When we come back, we'll be addressing a portfolio segment, so don't go anywhere. Welcome back. You're tuned into Buy Now, Sell Now Weekend, and it's that time of the show where we answer individual portfolio queries. Today, we are going to talk about Mr. K. Sanjay's portfolio. He's 60 years of age, he's retired, and he is based in Pune. Let's run you through the 9 stocks that he wants to have his queries answered on, which are currently in his portfolio. Aditya Birla Fashion Retail, 500 shares of that one, which he's purchased at 155 rupees. Astra Microwave, 500 shares purchased at 126 rupees. Another 500 shares of Simco at 90 rupees. Moving on, there's also Inox Wind, which he has purchased at a price point of 195 rupees. Colde Bartle from the real estate at 105 rupees per share. And there's also Lumax Autotech, 200 shares of that one purchased at 450 rupees. Max India, there's 500 shares of this one at 158 rupees. Another 200 shares of Majesco, which he's purchased at 380 rupees. And lastly, Wockhardt, 770 rupees is his purchasing price for this pharma stock. So all of the stocks are actually in the mid and small cap space. He's not really chosen any large cap stocks to be a part of his portfolio. Avinash, let's talk about the first 3 stocks in his portfolio. There's AB Fashion, Astra Microwave as well as Simco. What's your view on these 3 stocks?
No, I think he should hold on to all these 3 stocks. Aditya Birla Fashion, our sense is that the company has a very strong business model, and if he can hold on for the next 18 odd months, he could probably look at a target price of around 200, 210 year. As far as Simco is concerned, I would believe that Simco is also a good turnaround story, and possibly despite the fact that the stock has come down from his buying price, he could look at a target price of around 110 year, but here he needs to put in at least 12 to 15 months of time.
Okay, so I think as far as these 3 stocks are concerned, it's a thumbs up. Inox Wind, moving on, 195 rupees is where he's purchased this one. But yes, there was a lot of trouble in relation to Inox Wind, especially the kind of weak management commentary that we saw in Q4, which is something that caused the stock to tank. He's losing money over here. Colde Bartle, however, on the flip side, he's making a lot of money there because it has rallied along with the rest of the real estate back in 2017. And some money made in Lumax Autotech as well. He's purchased this one at 450 as opposed to the current market price of about 480 rupees. Avinash, your call?
No, I think I would believe that Inox Wind disappointed the market significantly by its Q4 and FY17 numbers, and the management commentary for FY18 was quite disappointing and negative. So I would believe that it's better to get out because the coming quarters could possibly be more challenging. I would suggest that instead of Inox Wind, if we can get into Fortis Healthcare, which is trading at around 200 odd rupees, that could be a good switch from Inox Wind, where you could get a decent upside of almost 250, 260 if he can hold on for the next 12 to 15 months. Colde Patil also, I think he should hold on. I would believe that within the real estate space, this is a quality player and with a very strong order book visibility. Here already he is making a decent profit, and I would believe that over the next 12-15 months, he could get a target price of around 230. And finally, Lumax Autotech, is a quality auto component player supplying to Maruti and most of the 4-wheeler passenger car players. Here, I would believe that, typically, despite the fact that demonetization has impacted demand, over the next 12-15 months, the company should do well, and we are looking at a target price of 600 here.
Okay, so Inox Wind, the prospects don't really look good, as the management himself had pointed out. So exit is what Avinash is recommending, but hold on to Colde Patil as well as Lumax Auto. And the last 3 stocks in his portfolio, Max India, he's purchased at 158 rupees. It's a bit of a spot of bother for him over there because he's losing some money over there. Moving on, there's also Wockhardt, which features on the list, which he's purchased at 770 rupees, and Majesco at 380 rupees. Both of these stocks as well, he's losing money. And of course, Wockhardt is a concerning point given the fact that most of its plants are under import alert. So, when it comes to financials, the company is not being able to deliver. Avinash, what do you make of these 3 stocks?
No, I think as far as Majesco and Max India is concerned, I think he should hold on to Max India. Max India, I would believe, is definitely a strong structural story, and if he can hold on for the next 18 to 24 months, he could get a decent upside. Our sense is that this will be a slow mover, but he could look at a target price of at least around 180, 190 over the next 18 odd months. Majesco also, according to us, is a very strong player in the insurance product market and operates more in the US markets, and the stock has been hammered quite badly, but looking at the kind of order book visibility, he can hold on. Probably he could look at a target price of around 450 here. And as far as Wockhardt is concerned, I continue to be negative because as you rightly pointed out, all its plants are now shut down, and probably earnings visibility continues to be extremely weak. So, here I would suggest him that he could possibly switch over to another stock that is Bharat Financial, where we believe that it is trading below 700 rupees, and probably if one takes a longer term view, then the microfinance market is definitely poised to grow at a pretty healthy pace, and Bharat Financial is a market leader here. So, here he could possibly get a better return compared to Wockhardt. He could look at a target price of around 750, 760 here.
Alright, that's a view coming in. So I think more or less in your portfolio, just look at exiting Inox Wind as well as Wockhardt. Both of these stocks, Avinash is not exactly convinced with the fundamentals. And instead, he says you could park your money in Fortis Health or even Bharat Financial for that matter. Of course, do keep in mind that this is only a model portfolio, and please do consult your individual investment advisor before taking any investment decisions. We'll slip into a short break, but when we come back, we'll be addressing the technicals as well as the fundamentals of the Indian market and getting you top strategies. Stay tuned. The Indian markets and the kind of move we've seen in the week gone by, and well, what an exciting week. We managed to cross above the 9500 mark, but that 3-day of record setting spree came to a screeching halt on Thursday and Friday, where we did see some profit booking kicking in, mostly on account of the way global equity markets moved. So yes, finally we shut shop below the 9500 mark, but no complaints really. Avinash, let's get in your call firstly on the markets. What do you think is the way forward? Do you think that this correction that we saw was a bit healthy and that the market momentum, the upward market momentum remains intact?
Yeah, I think broadly the market momentum continues to remain positive, and as long as domestic liquidity flows come into the markets, I would not be surprised that possibly the markets could react to global news as of now, but somewhere around say 9400 or maybe 9350 there could be some amount of stability in the markets, and I would not be surprised that I think since now the earnings season is almost over, the next trigger in the markets could now be the monsoons. I think if the monsoons are going to be in time and as per the kind of Met forecast, then I think you would probably see further kind of upward momentum to the markets. I think clearly the markets had become slightly top heavy, and some profit booking is definitely always welcome. So I think this is nothing to worry, but overall I think it's going to be a stock picking market, and at least in the near term you're going to see a lot of stock specific activity.
Okay, lots of stock specific activity going forward, and yes, monsoons of course is something that everybody is watching out for when it comes to determining the market direction. Sarvendra, what does it look on the charts? Do you think we'll be able to reclaim the 9500 mark anytime soon?
No, I think if you look at the weekly setups, I think there's definitely a sign of a short-term concern where probably we could slip back towards that 92, 92.50 support area. So that definitely that view still remains, and expiry weeks are very, very volatile. So we have to keep in mind that we have an expiry coming next week. So my sense here is that that 100, 150 point dip is possible. But yes, I think towards 90, 200, 92.50, the risk rewards would again be slightly more bullish. So keeping a slightly trading mix, 9500 definitely will get tested probably next week or a week after that, and expiry week themselves could be volatile, so you never know. Expiries are always unpredictable, and you probably go back straight back to 9500, 95.50 as well. But I would say that with the weekly pattern which we have made this week, I think there's definitely a risk that the expiry could be 100, 150 points lower from 9400. So that gives us that number. So I would be slightly have a mixed trading view for the week next, and try and be more aggressive around 92.50 on the buy side.
Okay, so there is a possibility that the Nifty may slip once again to the 92.50 level. So that's of course Sarvendra's view. But in that light, Avinash, you spoke about how there'll be a lot of stock specific action. So tell us, what would be some of your long-term wealth creation ideas where equity investors can park their money for the long haul?
Yeah, I think within the given space, we like housing finance companies, and within that we like Diwan Housing Finance. We believe that Diwan Housing Finance, which is the 4th largest housing finance player, is going to benefit significantly from the affordability housing segment, which is now promoted aggressively by the government. In terms of the business mix for the company is a very well diversified player, has a very strong pan-India presence, and almost 75% comes from the home loan segment, another 17-18% comes from the LAP segment, and the rest comes from the SME and the project loan segment. The company has managed to maintain a very strong asset quality level, which is a kind of a big positive for the company, and our sense is that the management has already guided for a 22 to 23% loan book growth for FY18. Our sense is that valuations look very attractive, around 1.4, 1.42 times FY18 price to book, and we could look at a target price of around 500 odd over the next 12 to 15 months. So I think this is a stock which one should definitely accumulate. The second stock we like is a mid-cap specialty chemical and dyestuff company called Sri Pushkar Chemical and Fertilizers. The company came out with a very decent set of numbers for FY17 recently, with a top line of 300 crores and a bottom line of 30 crores. Earnings growth was very strong, almost 40 to 45%. The company has gone in for an expansion for both its dyestuff and specialty chemical business, and we believe that earnings growth trajectory is going to be very solid over the next 12 to 18 months. We are looking at an earnings of almost 15 to 16 rupees for FY18, and plus operating EBITDA margins are also expected to improve. So here also I think any weakness in the stock should be used as an opportunity to buy. We have a target of around 250 to 260 here over the next 12 months.
Okay, DHFL as well as Sri Pushkar Chemicals is what Avinash is advising for long-term investment. Sarvendra, on the charts, however, what are some stocks that catch your eye?
See, I think we'll have to look at the view as well. So, as I said, the view remains slightly mixed for the next week. So, it will be a slightly mixed bag. Going in favor of sells, I have three trades where one is buy and two are sells, and going into the favor of sells just because the fact that we have a slightly weak closing pattern as of today on the Nifty. So with that sense, with that picture in mind, I think I will take a 7 days, 10 days kind of a trading stance. And firstly, I would want to go long on Federal Bank. I think this stock clearly a nice bit of consolidation over the last 10, 12 odd sessions on Federal Bank. And now I think clearly with today's close, my sense is that the highs at 117 could get tested again. So I would say that I'll trade it on the upside for a target of around 120. Highs at 117 should be taken out over the next week, 10 days. Keep a stop loss there at on a closing basis at around 105.40 for Federal Bank, and take a long trade there is my recommendation. The next two trades are on the sell side. The qualification again being slightly weak closings on Friday, and weekly setups on candle patterns are slightly weak. The first one being a sell on Bajaj Auto, where I clearly feel that the stock could slip towards 28.50. So I would like to short sell that. Stop loss would kept at 3006.60 for that particular trade. And last one is a sell on Havels. I think clearly this one, the last leg is very, very stretched, and now clearly slightly weak patterns coming on the monthly, weekly setups as well. So a sell on Havels for a target of around 460, and a stop loss there kept at 501.60.
All right, those are strategies coming in on the technical side of the market. Hope you've taken note of all of them. Sarvendra as well as Avinash, thanks so much then for joining us on Buy Now Sell Now Weekend, helping our viewers out with their queries and answering all of their individual stock questions. But with that, it's a wrap on this edition of the show. Thank you for watching and have a lovely weekend.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.